This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall, joining us on the telephone from Toronto, where he's going to be on the Lang and O'Leary Exchange later on today, Harold Siegel. We're taping the show on April 26th, 2013. Harold, of course, our financial and diamond expert. To connect with Harold, go to rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call him at 1-800-432-1022. The company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, worldwide precious metals. www.pmc.com, their website, telephone number 1-866-623-2002. Radio show runs News Talk 1010 in Toronto, 630 CHED Edmonton, also News Talk 770 in Calgary. We're on the radio. We're online. We're on Harold's websites, rarecoloreddiamonds.com, HESradio.com. We have podcasts through iTunes. We have this radio show as a podcast. We have Harold's daily market commentary there as well. We're everywhere you go. We are portable. This radio show is for you, and we're available to you 24/7. What a week it was. Gold and silver came back very, very strongly. Strong physical buying all around the world. There were shortages of precious metals. Also, people waiting in lines to get precious metals. People paying premiums for precious metals. And those that brought the paper market down a few weeks ago, they must be very, very surprised at this point. There's a physical market. There's a paper market. We've talked about it for quite some time. Egon von Greyers out of Switzerland, he's an expert in gold and silver, said the true gold market is only physical, and it's been that way for 5,000 years. Paper gold will eventually reach its intrinsic value, which is zero. That is guaranteed. In the next few years, the spread between physical gold will continue expanding until the market realizes that the issuers of paper gold cannot deliver. At that point, paper gold will go to zero, and physical gold will go to unimaginable levels. And Harold, we saw strong physical buying, and this obviously is something, really, it has not surprised me. I thought when the market came down a few weeks ago that the real test would be physical buyers would come into the marketplace and buy heavily, and that has happened. And I think the people that are in the paper market are sitting back thinking that they had killed the gold bull, and instead they have strengthened it in a way that I think they're even surprised at.
I think you're 100% right, Randy. I think you summed it up beautifully. The market did very, very well today and certainly this week and bounced off its lows. As we're taping the show, gold's up $16 today, and we're back up to over $1,470. So we're at $1,477 as we're taping the show. Silver also has done extremely well, and silver's back over $24 at $24.36. Also, oil came back very strong this week, and oil, even though it's down about 40 cents today, so at this time, it's back over $93. So the thing is that you can play with the markets as much as you want, but the trend is always going to be your friend in these markets, and the trend for hard assets, because of what's happening in the world financial markets, is definitely stronger. And as confusing as it is to try to separate the difference between the cash price and the paper price of gold and silver, the fact is that gold and silver gets its prices from buyers and sellers in the commodity exchanges. So the market's going to go higher when you have more buyers, and the market's going to go lower when you have more sellers. But what they're realizing now in the market, now that they brought down the price of gold and silver artificially, and everybody is now aware of that, the fact is that how is the price different between physical and paper? The difference is in the spread between the bid and the ask. It's becoming expensive to buy physical silver because there is no silver around. And this is the other thing about the marketplace, is that how in the world is it that silver and gold prices have plummeted like they have when there's no available gold and silver physically? So that I've never seen before. I mean, if you went to the gas stations and you went to fill up your gas tank, and they said that there was no oil, all the gas stations are closed, there's no oil, we'd be looking at oil prices trading at $1,000 a barrel. if you went to the grocery store and they said there has been no wheat, there's been a drought, and now the price of wheat has skyrocketed because the demand for it is extremely high and the supplies are very low. So why in the world does it work with every other commodity and just not gold and silver? Well, it does work with gold and silver because the laws are very simple. When the demand is high and the supplies are low, the prices are going to go up. And what we've seen recently is the fact that certain banks were allowed to short the silver market. And what they did is they bought or they sold so much silver and so much gold, more than even exists in the world today, and they were allowed to do that. Now, nobody is allowed to do that. There are rules and regulations in the commodities markets, just like there is rules and regulations in the stock market. You cannot control a market. After the Hunt brothers back in the 70s, late 70s, controlled, the silver market, there are restrictions in the market that stop you from doing that. And speculators can only purchase a certain amount of silver, a certain amount of positions in silver, and a certain amount of positions in gold. So why all of a sudden are banks like J.P. Morgan allowed to short so much silver that it causes the market to plummet like it did, even though there's no physical silver and the demand is extremely high? Well, now we're starting to see what the results are because everybody's out there trying to buy physicals right now, and there's nothing available, and the prices are going higher and higher. So you are going to see a situation where the physical market is going to come back very, very strong, and the people that do own it are going to be asked for higher prices. They're going to ask for premiums between the bid and the ask for people that want to buy it, and that's how the price of silver is going to outpace the paper price of silver. So there's just no doubt that with everything happening in the market, the only reason that the Dow Jones is moving up the way that it is because of quantitative easing. We've known that for years. We knew that the Federal Reserve was going to put $85 billion a month, or almost $1 trillion a year, back into the U.S. economy to try to stir the economy and get things going. It hasn't worked. The only thing that has been successful doing is moving the stock market higher. Most Americans are not in the stock market. They got wiped out in 1999 and 2008, and now the feeling is that the market is getting very top-heavy again, and there's a lot of situations in the market that are concerning, mostly the derivatives market. In 1999 when the markets crumbled, it was because of the dot-com companies. The NASDAQ went from 5,000 down to 1,000. In 2008, it was the mortgage crisis, and the Dow Jones plummeted from 14,000 down to 6,500. Now it's the derivatives market, and these derivatives markets are in the quadrillions of dollars. They're unregulated, and the markets could plummet because of that. So anybody who's been in the stock market for the last 12 to 13 years that has money in an RSP, for example, has not made any return. You may be up now maybe 1 or 2% over the last 13 years. That is not making money, and the risk in the marketplace, as we know it, is the highest that it's ever been. So obviously with everything that's happened over the last few months and the last couple of years with gold and silver, because the gold and silver market have been in a sideways to lower pattern for the last 18, 19 months, this market is going to break out. It was definitely some type of effort on top of the banks and the governments to hold down the price of gold and silver. But you can only do that for a certain period of time, and then the markets are going to come back, and they're going to come back with a vengeance. And that's what I think is happening now. Is it still possible for them to force the market down a little bit lower? Of course it is. They've done it before. They could do it again. The bottom line is that watching the Commitment of Traders report, which I do every time that they come out, these positions are almost gone now. So I think that we have seen the bottom of the market. We were concerned that possibly gold could have gone down to $1,250 or $1,300. It came very close, but now we're back up to $1,477, and I'd like to see the market get back over $1,520. A couple closes over $1,520 will send us back to the upside again, and again, that's only $50 from here. So all in all, I know it's been a very confusing, a very emotional time for a lot of people. Our radio show has been on for going on 13 years. We recommended gold at $250 and rode it up to $1,900 and back down to 13 and change. I can assure you that I have not sold my gold, and I don't know anybody who has sold their physical gold at this time. So I was to dinner last night with a client of mine that has his physical gold in Switzerland, and even though his advisors told him to sell it, he did not sell it, and he's holding it physically. So most people that do own physical gold and silver, I think, are in phenomenal shape right now, and there is no doubt in my mind that we're going to come back and not only take out 1,500 and 2,000 or 1920, which was the highs that we saw. But we're going to go on to see that the gold market and the silver market is going to reflect how terrible the world financial markets really are at this point. And with everything that's happening in the world today, with the banking crisis in Cyprus that everybody's petrified that's going to come to North America and Europe, with the sovereign debt problems in Europe, with the problems in the Middle East, more saber rattling from North Korea this week, and everything going on, the horrible situation in Boston, things are not looking good right now. The whole world is on alert as to fear in the marketplace and just general fear. So it is definitely a time to be on the alert. It's time not to take speculative risks in the market, to heavily leverage anything, to you want to own things outright at this point. And I think that's probably the most important thing, is that you want to keep your assets close at hand. The situation in Cyprus was so concerning, where the banks went under and people lost up to 60% of their money. That's just not acceptable. And the fact is that now that the banks are doing that and will do it again, just leads us to believe that we need to change the way that we invest. Alternative investments is definitely the way to go. If your money's in stocks, mutual funds, and paper assets, you can see how quickly you can lose your money, and you don't want to have your money sitting in paper at this time.
Connect with Worldwide Precious Metals. They're the company Harold recommends you use. Great Canadian company in business the entire time this bull run in hard assets has been going on. www.pmc.com, their website, telephone number 1-866-623-2002. Yes, we're hearing about shortages of precious metals, people waiting in lines, paying premiums. Speak with Worldwide Precious Metals. They will get you what you need when it comes to gold and silver. And because of everything that's happening in the market today, they have reduced their fees substantially to keep in line with the heavy demand that they're seeing. They're making it easier for you to start your own precious metals investment account or add to your position. It's time to get some money out of the banking system. It's time to shift some of that money into physical bullion, gold, silver, platinum, palladium, for preservation of your wealth. It's freedom of money. Gold, silver, diamonds, secure, portable wealth, and most importantly, obviously, a hard asset that has stood the test of time. We know that's gold and silver, platinum, palladium, diamonds. And one thing to keep in mind, too, when you do get involved in this market and you have your own precious metals investment account, it is a liquid asset you can buy and sell with a phone call, secure storage insured to the full value of your investment, 24/7 online access, and you'll also have the use of a full-time expert from Worldwide Precious Metals. I should mention that when you have precious metals with Worldwide, it is out of the banking system, and you can speak to them, and they'll explain more to you. If you're wondering what's happening here in the last month with precious metals, get our newsletter, Speak with Worldwide, www.pmc.com, www.pmc.com. Telephone number 1-866-623-2002. Now more than ever is a time to have hard assets in your portfolio with all that's going on in the world today. And one thing that we have in our newsletter we haven't really touched on is this new bird flu. This new bird flu is very, very concerning. Now, in our newsletter, here are some of the headlines and highlights, and this will give you an idea of what kind of week it was. Lawrence Williams from MineWeb. Shortages of physical gold now a global phenomenon. Momentum is continuing to build in gold bullion purchases as supply shortages and high premiums on physical metals are being reported all around the world. Get that story from Worldwide. You can read it for yourself. Also, U.S. Mint runs out of smallest American Eagle gold coin. U.S. Mint sales of gold coins soar after the future slump. The U.S. Mint in April has sold 153,000 ounces of American Eagle gold coins, the highest demand in 3 years. The UK Royal Mint gold coin sales have more than tripled in April. In fact, the Royal Mint, established in the 13th century, sold more than 3 times more gold coins this month than a year earlier as prices declined. Sales are up 150%. Gold. Central banks are buying gold, the most since 1964. Also, we are seeing heavy, and this is not a surprise, heavy physical demand for gold in India. Retailers are struggling to keep up. You can see pictures of that. In fact, we have a picture of a store, and they're just cleaned out of their gold. Gold sales in China and India, very, very heavy. Feverish buying demonstrates, obviously, that there's huge physical demand in Asia. Asia is red hot right now. Gold bars in Dubai disappearing. Some people paying premiums of 750%. Now is the time to have your own allocation of precious metals. We saw this pullback. We were around 1,550. We saw a pullback all the way down to almost 1,300. And here we are today, pushing up around close to 1,500 again. And as a result of this pullback, we're seeing strong physical buying all around the world. And Harold, this is exactly what needed to happen to show the people that are pushing the levers when it comes to paper gold, obviously, that there's a physical market, there's a paper market. You might be able to drop this down short term, but the physical market ultimately will rule the day.
You're 100% right. And, the thing is that when the markets did come down as much as they did, most of the physical was picked up by countries like China and India and Russia type of thing. So, again, it certainly appears to me that the reason that China is buying so much gold is to back the yuan by gold as a reserve currency. So that is very possible that could happen within the next couple of years. And every time this market comes down, they tend to buy more and more and more. So they certainly have an agenda. I think they know what they're doing, and I do not have any confidence that we know what we're doing here in the United States. That's for certain. I mean, they're making a mess of things, and it's almost like at this time, Randy, when you look at the markets and you see how blatantly they're traded, it's almost like they're laughing at people. It's almost like they're saying, we can do what we do because we can do it, and there's nothing you can do to us type of thing. And that may be true at this particular point because you can't fight City Hall and you can't fight the government. But the bottom line is, and please mark my words with this, is that the trend is always your friend. And when you're printing as much money as governments are printing, not only in the United States but all over the world, look what Japan is doing, it's going to bring on inflation. It's an action-reaction type of situation. If you do this, this is going to happen, and that's exactly what is going to happen. It may be 2, 3, 4 years down the road, but we're going to be looking at inflation that is so high that gold could go into the thousands and thousands of dollars. So obviously, to be able to pick up gold in and around $1,500 and silver below $30, even below $25, is going to turn out to be a tremendous buy, and I recommend it very, very highly.
In fact, Albert Edwards from Societe Generale agrees with Harold. Stocks will crash, hyperinflation will come, gold will go to $10,000. Get that article from Worldwide Precious Metals. It's in our free weekly newsletter we send out via email every week. Connect with Worldwide. Start your own precious metals investment account today. www.pmc.com, telephone number 1-866-623-2002, 1-866-623-2002. The website, www.pmc.com. And to give you an idea of some of the other things that are going on in the world, a record number of U.S. households are on food stamps, 1 out of every 5. And yet we're being told that everything is getting better in the United States. In fact, it's not. And then you go overseas. You look at a country like Spain. The jobless rate recently hit 27%. When it comes to youth unemployment, it's around 50% in Spain, Portugal, also countries like Greece. Serious ramifications in the years to come for those that are being affected by this youth unemployment right now. Also, Fitch downgraded the UK and their credit rating to AAA it went from AAA to AA, similar to what happened to the United States. Dealers, a story out of Bloomberg that we have that's worth noting, they actually don't believe that quantitative easing is going to end in 2013. It's probably going to continue until 2016. A lot of people talk about the stock market and how well it's doing, and people forget Apple was one of the top stocks. It went from hundreds of dollars all the way to $700. And here we are now. Apple is down a whopping 44% from its all-time high of $702.10 on September 19th, 2012. That's an enormous $291.42 billion worth of paper losses for Apple shareholders. I know Mark Faber, Harold, we have about 3 minutes left in this segment. Mark Faber, who's an advocate for gold and silver, famous for the Doom and Boom report, he said in regards to gold and silver, sure, we've had a pullback in gold and silver, but take a look at what's happened to those holding Apple that bought at the very top. They're feeling enormous pain right now.
Well, it's very, very true. But the fact is that I don't think the Apple stock was manipulated down. That just happened because of technicals in the market. The fact is that gold was in a major bull market when they decided to bring down gold. Don't forget, at 1920, gold was on their way to $2,000, $2,200, and so on, till the exchanges made it so expensive to trade gold and silver that it brought the prices down. So, again, they could do whatever they want over the short term, but the trend is your friend, and at this particular point, it looks to me like gold is on the rebound. It's coming back strong, as is silver, as is oil. Don't forget they got oil all the way down to $86 when they brought down gold and silver. Now oil's back up to $94. So I think we're looking okay, but the future looks very bright if you're in hard assets, and that's where I recommend you keep your money.
As we touched on last week and mentioned off the top of the show, Harold is going to be on the Lang & O'Leary Exchange today, talking about diamonds and alternative assets. And on the CBC during the week, last week, they ran a show on their Doc Zone. It was called The Secret World of Gold. I did have a chance to tape it on my PVR, DVR. I did get a chance to watch it. If you did not, you can go online, and we have a link to it in our newsletter. So get the newsletter from Worldwide if you would like to see The Secret World of Gold. And they talk about manipulation of gold in there. Very heavy talk in regard to the fact that the gold backing the paper is not there. And when people find out the gold backing all this paper out there is not there, you could see incredible price spikes in gold. This is a documentary that I highly recommend you watch. It's about, I think it was about 50 minutes long when you take out the commercials. So definitely get that newsletter from Worldwide, wwpmc.com, wwpmc.com, telephone number 1-866-623-2002. Somebody had put it on YouTube, and it was removed from YouTube due to copyright, which only makes sense. But CBC has it on their website. We have a link to their website where you can watch a show, The Secret World of Gold. Well, it's no secret that now is the time for hard assets. Speak with Worldwide Precious Metals about investing in gold, silver, platinum, palladium. Their telephone number, 1-866-623-2002. The website is wwpmc.com. Going to come back and talk about diamonds. And it was another great week for diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us on the telephone from Toronto. He's in Toronto for the Lang & O'Leary Exchange, where he's going to be talking about alternative assets, including diamonds. Our diamond and financial expert, Harold Siegel. And no doubt we will obviously get a piece of that show and show it to everyone who is interested after Harold has appeared. Connect with Harold about diamonds, rarecoloreddiamonds.com, telephone number 1-800-432-1022. And if you're looking for precious metals, shortages all around the world, Worldwide Precious Metals will help you get the gold and silver you need and want for your portfolio. Connect with them, wwpmc.com, telephone number 1-866-623-2002. Our radio show is on News Talk 1010 in Toronto, 630 CHED Edmonton, News Talk 770 in Calgary, on the radio, online on Harold's websites, hesradio.com, also rarecoloreddiamonds.com. If you ever miss a radio show, we're there, and we have a podcast as well. It is through iTunes. And what you need to do is go to iTunes, obviously have it on your computer, your smartphone, iPad, iPod, also your iPhone. Go to iTunes and type in World Financial Report on Radio. Harold's daily market commentary is there. Also, past archive shows are there as well. We are portable. Our radio show goes anywhere you do. RareColorDiamonds.com, our featured diamond of the week. And this week's diamond is a 0.57 carat hard-cut, fancy, vivid, purplish pink argyle. It is absolutely stunning. And we should mention, Harold is going to be having another seminar May the 1st at 8 Eastern, 6 Mountain. That is a Wednesday, May the 1st. We encourage you to go to RareColorDiamonds.com and sign up for the seminar. I did it myself last time. It's very, very simple. All you need to do is type in your information. You will be sent links, and as a result, you can just click on the link and you'll be able to watch the seminar that was a huge success last time. Another seminar, May the 1st, 8 Eastern, 6 Mountain. Go to the website, RareColorDiamonds.com right now and sign up. And Harold, it was a great week. We had outstanding sales last week. A blue diamond sold for $2 million per carat at Bonham's, and it was a 5.30 carat fancy deep blue diamond. It went for $9.5 million, or $1.8 million per carat. And I understand that there was a packed sales room. Lots of telephones were being used as well. It was an outstanding ring that came to us at 1965. The pre-estimate on it was $2.3 million. It went for $9.5 million. An outstanding blue diamond sold this week. So more good news in the diamond world. We're seeing those rare blues, Harold, go for unprecedented prices.
Unbelievable, Randy. It is a phenomenal price that, again, is selling for 3 times as much as they anticipated. And it isn't that the people at Christie's and Sotheby's don't know what they're doing. It's just a sign of the times. In fact, almost last week when we reported what happened at auction, it was very similar. Diamonds selling for way more than what the analysts felt that they would sell for. So I'm ecstatic about this. Most of my clients own diamonds. The diamond market is why I'm here in Toronto to do the interview with Lang & O'Leary Exchange, is because of their interest in alternative markets type of thing. So, you know, the stock market is the stock market. Some believe in it, some don't. I happen to be one that's on the sidelines. I don't risk my money in those type of markets. When banks are going under, when the Cyprus Bank last month closed down and stole 60% of depositors' money, that had to send a red flag up. Everybody at this point here should realize that you're on alert that what happened in Cyprus could happen in Canada, in the United States, and all through Europe, because all banks basically subscribe to the same business model. And the fact is, when you put your money in the bank and you're collecting interest, if that bank goes under, you're going to lose your money. Now, in Canada, a bank account is guaranteed up to $125,000. So if you're sitting with $200,000 in your bank account and you're insured up to $125,000, and if that bank closes, you're going to get back $125,000 and lose $75,000. Just imagine how angry and upset you would be that you lost that kind of money just by depositing your money in the bank, which we all thought we were putting there for safekeeping. Well, we're not. Now this is a wake-up. The fact is that the banks in Cyprus stole 60% of people's money. People are destitute, and they don't know what to do. Try wrestling with those emotions. Try, realizing that most 60% of your money is gone, and what do you do about that? Well, that not only happened in Cyprus, but it's happened and it will happen all over the world. And there are countries at this point that are sending out alerts warning their citizens that this could happen. And you say, how in the world could it happen? I'll tell you exactly how it could happen. In the United States, the FDIC, which is the Federal Deposit Insurance Company, they've got $65 billion put away to insure bank accounts. And that sounds like a lot of money, but there's $10 trillion in bank accounts here in the U.S., and you got $10 trillion at risk and only $65 billion going back to potential depositors. So that, to me, scares the life out of me. Tells me that you don't want to keep more money in the bank than you need to. You want to keep your money in your bank to pay your bills and that type of thing. But now is the time to look at the type of investments that Randy just brought up. A blue diamond. In 2005, I can assure you that blue diamond that sold for how much money, Randy?
Well, the estimate on it was $2.3 million. It sold for $9.5 million.
Okay. So in 2005, that diamond probably was worth about $300,000 to $500,000 in that range, and now the diamond's selling for $9 million. I mentioned on last week's show that I was out for dinner with some friends, and the woman was wearing a 5-carat pink. Her grandmother bought it for $35,000, and now the diamond's worth $3.5 million. So you want to invest in certain diamonds. You want to put them away for your future, for your safety, and for capital appreciation. There are no investments out there that you can make today that are safe in any way, and the higher the return, the more risk you're taking. But in a rare color diamond, you could do extremely well. They never drop in price, and the fact is that the only risk you would take is either losing it, physically type of thing, because these diamonds do not go down in value. So when you look at that blue that you could have probably bought for $400,000 to $500,000 at one time, and now it's sold for $9 million. That is what's happening in the diamond market. We have clients that have seen tremendous returns. We have clients that invested $50,000 5 years ago, and now they're worth $250,000. Vivid Argyle pink diamonds do that. In fact, for the last 3 weeks, we've shown some of our vivid pink Argyles, which are the rarest pink diamonds that you can buy. These vivid pinks are now doubling every 2 years in value. So the thing is that the closer we get to the mine closing down, which is only 5 years from now, these diamonds are going to start to double every year. Give it 7 years, and a diamond you could buy today for $100,000 could be worth $1 million, $800,000 to $1 million. That's what we believe these Argyle pink diamonds are going to do. The higher quality you buy, the more and more they go up. So the way that the Gemological Institute of America grades pink diamonds is that faint is the lowest, then very light, then fancy light. Now, fancy light Argyle pink diamonds are very beautiful. They're a very soft pink, and you can get involved in those starting at about $15,000 to $20,000 to $25,000. Then you go to the fancy pinks, and they're a little bit higher because the color is stronger. Then you go to the fancy intense pinks, then to the fancy deep pinks, and then to the granddaddy of them all, the fancy vivid pinks. And those are the diamonds that have been doubling every 2 years. But there's very, very few of them available, and the mine is about to close, and there's not going to be any available. So you buy an Argyle pink diamond and put it away for 10 years, and you're talking about seeing the type of returns that we've been talking about on this show, that you could buy a diamond for $50,000, and in 10 years from now it could be $500,000. It happens in the diamond market all the time. Now, the thing is that not all diamonds are good investments. In fact, you do not have to spend multi-millions of dollars in order to make money in the diamond market. There are 3 different classes of diamonds that I recommend, and all of them are somewhat reasonable. First of all, just so you know, we carry diamonds that start at $15,000 and have some diamonds put away that are over $40 to $50 million. Most of our clients that invest in diamonds invest under $100,000. So even if you're an investor that has $20,000, $25,000, $30,000, $40,000 sitting in the stock market, the mutual fund market, or extra cash in the bank that you're now concerned about, you may want to look at a diamond. Now, the thing is that they're portable private wealth. I'm going to be on the Lang & O'Leary exchange today, and I'm going to show 2 diamonds. One of them is a 3.5-carat fancy intense green diamond ring that I own that is worth upwards of $4 million. And then there's a vivid pink Argyle diamond from the 2003 Argyle tender that is one of the rarest vivid pink diamonds in the world, and that diamond is almost $4 million. So when you talk about portable private wealth, when you talk about the type of wealth that can change your life, that if things went bad in North America and we needed to start all over again, these type of diamonds could be sold in Europe, in Asia, in the Middle East, and we do all that for our clients. We actually built the secondary market with auction sites all over the world internationally to sell our clients diamonds. Because right now, the British pound, for example, is worth 40% more than the U.S. and Canadian dollars. 40%. Why would we not want to sell your diamond in London at one of our auctions and collect not only a profit on the diamond, but pick up 40% on the currency? So that's what we do for our clients. So the 3 types of diamonds that I recommend. Number 1, the Argyle pinks. That's a no-brainer. The mine is going to close in 5 years. These diamonds are skyrocketing in price, but in the next 5 to 7 years, I think our clients are going to make a fortune in the pink diamond market, and I recommend them very highly. Argyle pinks start at about $15,000 to $20,000, and they go up from there. Then you've got the yellow flawless diamonds. Yellow flawless diamonds, and they've got to be the internally flawless ones. They double every 5 years in value approximately. They never, ever decline in value. And in 1980, when we had extremely high inflation and 20% interest rates, these diamonds went up 500%. I love yellow flawless diamonds, but they have to be the internally flawless. If they're flawed, they're not going to go up as much as an internally flawless, and we want to make the maximum return on our money. Then the other diamonds that I recommend are not necessarily colored diamonds. They're a colorless diamond. And the first time I brought them up, I know Randy was a little, questioning me about it. Why would a white diamond be so valuable? But these are the deep flawless whites. These are the rarest white diamonds in the world. They're 10 times the price of a normal white diamond. They're spectacular. When you look at them, they're perfect in every way, and they're negative correlated to the stock market. It means if the stock market drops 50%, these diamonds will go up 50%. That's what they did in 2008. And they're in Europe, they're used as actual currency. So again, we carry red diamonds, which are the rarest. They start at about $2.5 million. You don't have to spend $2.5 million to make an awful lot of money in the diamond market. In fact, if you came to me with $1 million and wanted to invest, I would probably recommend that you buy more of the Argyle pinks and some of the deep flawless whites and yellows and diversify so you could sell off a diamond here and a diamond there if the need ever came to do so, because nobody knows what the future is going to bring. When banks start stealing your money, when the exchanges start playing with the markets and doing what they did over the last couple of weeks in gold and silver and oil, those things are illegal, and who wants to trade in a market that is manipulated and the governments don't do anything about? The thing about the rare color diamond market, they don't trade on exchanges, so they can't be manipulated in the same way as a stock can or a commodity can. What we did is, because a diamond is only a good investment if it could be resold, is we built a secondary market. My expertise in the markets has always been in commodity trading and in marketing. And when I look at a market as small as the Argyle pink market, which is only 200 carats a year, I've got way more clients than buy those type of diamonds. So we could sell that diamond out in the snap, that market out in the snap of a finger type of thing. It's an amazing time to be in these markets. It's one of the only investments that is safe and that can give you the returns that you need in this type of time. Because if you're in your 40s, 50s, 60s, or 70s, and you're in the stock market, and these markets plummet one more time, you'll never, ever make your money back again. And all you have to do for confirmation of this is look and see how your RSP has done over the last 13 years, and I would be shocked if you told me that you were happy with the returns that you're getting in the stock market. So, again, it's the hard asset market. It's the reason that they call this to be on the Lang O'Leary Exchange. It's my love and passion, and my clients that are in the rare color diamond market sleep comfortably at night, unlike what happens in stocks and commodities. Now, again, there's a huge difference between what's happening in the trading of gold and silver right now versus what's actually happening in the physical market. I'm only a believer in the physical market. I do not trade paper assets at all. We only buy physical everything, whether it's diamonds, whether it's gold, whether it's silver, whether it's cars, anything you want to own outright. You don't want, and I guess the best example I can give you, the U.S. owes $16 trillion, and they think the best way to get out of debt is to incur more debt. We know as Canadians that is the stupidest thing you can do. The fact is that you tighten your belt and you cut back on your expenses and you work through your problems that way. You don't create more debt because you're already in debt. That's a short-term solution that's going to absolutely annihilate you down the road, because who can afford that type of debt? So, again, Randy, I'm very, very comfortable at this point here. Again, I've got over the emotions of what they did in the markets last week. Gold's moved up $170 this week. About $100 this week or more. So has silver moved up strong. Diamonds at auction are skyrocketing. Again, I just think that we're sitting in a very pretty position right now.
I do agree. RareColoredDiamonds.com, the website. Featured diamond this week is 0.57 carat hard-cut, fancy, vivid, purplish pink Argyle. If you've never seen an Argyle hard-cut, go to the website right now, RareColoredDiamonds.com. It is absolutely stunning. And speaking of pink diamonds, last week we spoke of this diamond. It's called the Princey Diamond, and it sold for $39 million at auction Christie's in New York. Now, that diamond had not been seen since 1960. And it's interesting to note that back in 1960, it was purchased, and I know a lot of people may have a hard time wrapping their head around this, but it was purchased for around £46,000. The year was 1960, £46,000, and that was $70,725 at Sotheby's in London. You fast forward from 1960 to the year 2013, and you have a diamond selling for $39 million. Now, also last week, New York, a magnificent jewel sale. The Princey diamond sold, but there was also a white diamond that sold as well, and that was through Sotheby's. It's the diamond that Harold talks about, those D flawless. It was a 74-carat diamond selling for $14.1 million. But the interesting thing to note is that it was sold in 2001 for $4.3 million and sold last week when resold for $14.2 million. Harold, I think people get an idea of the potential of these markets when they can see recent or even in the past what some of these diamonds had sold for and what they're selling for at auction right now. It really opens up your eyes to the potential of this market.
Man, Randy, you couldn't have said it any better. From $4 million 10 years ago to $14 million, 400% return. I mean, that's unbelievable. But that's what's happening, especially during these particular times. So, again, I couldn't be more happy about what's happening in the diamond market, and it just seems it's getting better and better every week. But by far, the closer we get to the Argyle mine closing, these diamonds are going to skyrocket in price. So, again, you still have plenty of time to get involved. We just put $40 million in with Argyle to buy the next 2 years of production. That's how serious I am about Argyle pink diamonds. So, again, I want my clients to own them. We want our clients to make money. That's the reason for the radio show. And again, we created the secondary market for you to resell it. And again, I couldn't be more proud of that because we built it in North America. It was built by my friends in Vancouver, Relentless Technologies. The technology is proprietary. It's never, ever been done before. So now what we decided to do, now that I'm working with a Swiss banker, and he's so blown away by our diamond business, they're helping us open in Dubai, Hong Kong, London, and Panama in Central America. Will now be an international auction business with independent auction businesses in each of those areas, for the simple reason that I'd like to hold an auction in London and collect 40% more on the currency markets for my clients. So not only make a profit on the diamond, but if we can pick up 40%, it just works this way. If you sold a diamond for 100,000 British pounds and you convert that back to Canadian dollars, you're picking up $40,000 more in Canadian dollars on the sale. So again, that's what we do for our clients. Nobody else does this, but again, it's our business and we take it very, very seriously.
There is going to be another auction. Christie's has an auction coming up May 15th in Geneva. And once again, here we go. Harold brought to our attention those D-colored flawless diamonds. And they're going to be auctioning off a 100-carat flawless diamond. And I can't wait to see what that goes for. So far, you know, some of the other diamonds involved, rare, fancy red diamond ring, and they expect that to sell from anywhere $2 to $3 million. Some other amazing diamonds in that sale as well. But these D-color flawless diamonds are really taking the world by storm. Harold brought it to our attention first, and I would encourage you to speak with him about our featured diamond this week, a 0.57 carat hard-cut fancy vivid purplish pink Argyle, and ask him about those D-flawless diamonds as well. He's going to be on the Lang & O'Leary Exchange. We'll have more information on how that went next week. I hope everyone set their DVR as we warned you last week. Also, there's a special seminar for you only. Those are our radio listeners. May the 1st. There's a seminar, 8 o'clock Eastern, 6 p.m. Mountain Time. Go to rarecoloreddiamonds.com right now and sign up for the free seminar. It's an online seminar that Harold will be holding. And I know, Harold, with all the auction results we've had over the last little while and some of the things that are happening in the diamond market, this seminar is going to be a must-see.
Exactly, Randy. I wouldn't be surprised if we had 500-600 people attend. The beautiful thing is that the website that our clients will go to that hosts the seminar, again, is the same platform as our auction. So we don't live stream it. It's live, me doing the seminar for you in the comfort of your own home. You're going to be able to sit in your home with your family, put on your computer, sit back and watch for about an hour and learn everything that you need to know about the diamond market. You're going to know where diamonds come from, how they're cut, how they're certified through GIA, how to read a GIA report, what diamonds are worth more than others, what colors are worth more than others, what shapes are worth more than others. We're going to go through auction results, show our diamonds off and everything, talk about our auction business. Is something that you don't want to miss. If you're concerned about the world markets now, the paper assets, or if you're looking at diamonds as an investment, which is a very, very smart idea, you definitely want to attend the seminar. It's free of charge. Almost everything that we do is free. We don't charge for our radio shows, our newsletters, any information, any seminars we do. We like to bring this information to our clients so they can make an informed, intelligent decision.
May the 1st, seminar 8 Eastern, 6 Mountain. Go to rarecoloreddiamonds.com, and sign up. One of the things that is very, very concerning here over the last 2 weeks is the geopolitical strife around the world. Obviously, the bombers that had the explosives go off at the Boston Marathon was just sickening to us all. And we're finding out more as one of the bombers is still alive and what his connections are. Then here in Canada, the police made 2 arrests in a train terror plot. They wanted to actually derail a passenger train. And then over in the UK, an interesting story from Bloomberg, there were some terrorists there who wanted to set off bombs, and they had made some Forex trades hoping to get rich as a result of these bombs going off. They miscalculated. The bombs did not go off, and they ended up losing a lot of money, so that was nice to hear. But the other thing that is 2 items that are very, very critical. North Korea, the risk of a miscalculation there with the dispute over North Korea and South Korea and their nuclear and missile programs, it's very, very tense from some of the things that we're reading. Also, Iran and Israel, that situation has not obviously been dealt with. And then on top of it, the United States announced that Syria has been using chemical weapons in their war against their own people. A very sad situation in Syria. A lot of people want the world to get involved in Syria and obviously take things back for their citizens. But Harold, you can see, and we have about 2 minutes left here, some of the things that are going on in the world geopolitically. And then I didn't really touch on it, but I guess I should as well. We have that bird flu. And the bird flu, we've already had that happen once during the time that we've done our radio show, and now they're talking about another strain even more serious. So now is the time to have hard assets, have that insurance policy in your portfolio.
You better believe it, Randy. Probably never, ever more important than now because, again, you've got all these situations going up, and a lot of it is caused by stress and by money. Governments are out of money, and it's the same as if we're out of money. The stress level is high. You don't know what's going to happen next type of thing, except, with the government, it's on steroids type of thing. So as far as I'm concerned, it's the time to be very, very cautious. One mistake could cost you an awful lot, and you don't want that to happen. It's the time not to speculate, to own your assets outright, and be prepared for what's coming forward because, again, I think the show covered almost everything today. The paper asset market is a market you want to stay away from. You want to own your gold and silver and your diamonds outright, and you want them put away for your future. And again, we should be very, very strong going over the next few years.
Thank you very much, Harold Siegel. Good luck on the Lang & O'Leary exchange. We look forward to watching that and the seminar as well. Thank you.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Sign up for the free seminar, rarecoloreddiamonds.com, May the 1st seminar, 8 o'clock Eastern, 6 p.m. That's Mountain Time. Go to rarecoloreddiamonds.com and sign up for the free seminar to invest in precious metals. We're seeing unprecedented demand for gold and silver. If you're looking for physical gold, physical silver, Worldwide Precious Metals can help you. Connect with them, wwpmc.com, telephone number 1-866-623-2002. On diamonds, rarecoloreddiamonds.com, telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.